Today on Wall Street, U.S. markets closed the week on a strong note, with the S&P 500 and Nasdaq both setting new record highs. Tech shares once again led the charge, while the Dow lagged slightly as financials and energy names weighed on the index. Overall, investors remain upbeat, fueled by growing expectations that the Federal Reserve will cut interest rates at its upcoming meeting on September 16 and 17. The rate cut outlook is driving a broad risk-on mood, with investors betting that lower borrowing costs will support both consumer spending and corporate growth. Recent data suggests a cooling but resilient economy. Employment and inflation trends are not signaling a deep slowdown, and that gives the Fed room to ease policy. Tech and AI stocks were the clear winners of the week. Oracle stood out, jumping after reporting a massive cloud backlog and announcing fresh artificial intelligence contracts. That news reassured investors that Oracle is securing a solid place in the AI race. Tesla also gained ground, lifted by optimism around tech and electric vehicle growth as lower rates could help demand. In media, Warner Bros. Discovery surged after reports of a takeover bid by Paramount's Skydance, while Paramount itself also moved higher. On the flip side, Moderna tumbled as regulators prepared to discuss possible links between its COVID-19 vaccine and child health outcomes. Meanwhile, Adobe beat Wall Street expectations with stronger revenue, thanks in part to rising demand for its AI-driven creative products. Looking ahead, all eyes are now on the Federal Reserve meeting next week. A quarter-point cut is widely expected, but investors will be parsing every word from Chair Jerome Powell on how deep and how fast the easing cycle could go. Inflation data and corporate earnings will also remain critical drivers of market sentiment. In summary, it's been a week of record highs for U.S. equities, powered by technology and AI enthusiasm, with investors positioning for a potentially more dovish Fed.